Hi students, here I am going to help you preparing management accounting. In the first unit we have studied different techniques of management accounting, that is fund flow statement, cash flow statement, then budgetary control and so on. In that row, the next technique of management accounting is marginal costing. Now we will see what is marginal costing. Marginal costing is a technique which guides management in pricing, decision making and assessment of profitability. Okay, pricing in the sense they will be preparing the various costs incurred for producing the products. Okay, by preparing those costs means expenses. By assessing the expenses, they will be in a condition to fix the prices. If the expenses are higher or more, they can fix high prices, or if the expenses incurred are very low or moderate, they can fix moderate prices or low prices. And in the decision making, they can take cost-effective decisions needed for production with the help of the cost statement. And assessment of profitability in the sense, each and every business motto is to attain profit. So with the help of these cost statements, they can assess the profitability of each and every business. Marginal costing means the cost incurred for the additional units of production or product. Okay, this marginal costing takes into consideration fixed cost and variable costs. We will see what is fixed cost and variable cost. From the name itself, we can infer or understand what is fixed and what is variable expense. Fixed means the expenses which remains constant forever, irrespective of the additional units of products. And variable expenses means which vary or change directly in proportion to the volume of production. Okay. Fixed cost is static and variable cost is, or variable expenses are dynamic one, changing one. ஒரு ப்ராடக்ட் ப்ரொடியூஸ் பண்ணாலும் அல்லது 100 யூனிட்ஸ் ஆஃப் ப்ராடக்ட் ப்ரொடியூஸ் பண்ணாலும் எக்ஸ்பென்சஸ் ஒரே மாதிரி தான் இருக்கும். 101 ப்ராடக்ட் ஆர் 120 ப்ராடக்ட்ஸ், 150 ப்ராடக்ட்ஸ், 200 ப்ராடக்ட்ஸ் ப்ரொடியூஸ் பண்ணாலும் ஃபிக்ஸட் காஸ்ட் ஃபிக்ஸட் எக்ஸ்பென்சஸ் ஒரே மாதிரி இருக்கும். தட் இஸ் கால்டு ஃபிக்ஸட் எக்ஸ்பென்சஸ். வேரியபிள் எக்ஸ்பென்சஸ் மீன்ஸ் இட் மே வேரி according to the proportion of volume of additional products. இப்போ 100 units produce பண்ணுறதுக்கு 1000 rupees செலவாகுது அப்படின்னா 150 units produce பண்ணுறதுக்கு அதுக்கும் மேலாகும், அதே அமௌண்ட்டில் ப்ரொடியூஸ் பண்ண முடியாது. that is called variable expenses. Okay, with the help of data, I'll explain what is variable cost and what is fixed cost. Listen, let us assume a tailor wants to manufacture churidars. 3 situations I have taken into consideration in this data. First one, 1 chudi. Second one, 10 chudis. Third one, 20 chudis is going to manufacture. 1 chudi prepare பண்றதுக்கு cloth 2 meters ஆகும். அதோட காஸ்ட் எவ்வளோன்னு பார்த்தீங்கன்னா 200 rupees. If he is going to manufacture 10 chudis, the cost of the cloth comes to 2000 rupees. And if he is going to manufacture 20 chudis, the cost incurred is 4000 rupees. 1 chudiki 200 na into 10. 10 chudiki 2000. 20 chudis na 200 into 20, 4000 rupees. Likewise, the next item needed for producing that chudi is manufacturing that chudi is buttons. Buttons or whatever accessories you can take. Buttons, elastic items, என்ன வேணாலும் நம்ம எடுத்துக்கலாம். அதோட price வந்து 1 chudi produce பண்றதுக்கு 50 rupees. And for 10 chudis 500 rupees, and for 20 chudis 1000 rupees. You have to multiply this like the first row. Okay, 50 for 1 chudi, 500 for 10 chudis, that is 550 into 10, 500, 50 into 20 chudis, 1000 rupees. Get it? Okay. And the third one is thread. Thread needed for 1 chudi is 10. These are in rupees. Okay, I have given all these figures in rupees. 10 rupees க்கு நூலு தேவைப்படுது 1 chudi prepare manufacture பண்றதுக்கு. Here for 10 chudis the thread needed is 100 rupees thread தேவைப்படுது. Here 20 chudis க்கு 200 worth of thread is needed. Then labor charge. Here 100 rupees he is paying for manufacturing 1 chudi. Here for 10 chudis 1000 rupees he is paying, and for 20 chudis he is paying 2000 rupees. 10 into 10,000, sorry, 100 into 10,000, 100 into 20, 2000 rupees. So altogether he is meeting or incurring 360 rupees for stitching 1 chudi, and 3600 rupees he is incurring for 10 chudis, and 7200 rupees he is incurring for stitching 20 chudis. So if he is manufacturing 1 chudi, 360 rupees only he incurs, and for stitching 10 chudis 3600 rupees he is incurring. See the difference, it is changing. 1 chudi ku ivvalavu, 10 chudis ku ivvalavu. Likewise, for stitching 20 chudis he is incurring to the extent of 7200 rupees. So here also changing. Okay, so according to the proportion of the quantity of production, the expenses also gets varying. Because of that reason we are referring these expenses as variable expense. Okay, then we'll see fixed expense. For stitching these chudis they need not only these products, he need the machine also, stitching machine, that is sewing machine also he needs. So 5000 rupees he needs to buy a machine. Once he is buying this machine worth of rupees 5000, he can make use of that same machine for 10 chudis also. He is not buying again another machine to stitch these 10 chudis. The same machine only he is using for 10 chudis, and for 20 chudis also he is making use of the same sewing machine. So only one time only he is spending this 5000 rupees for getting this machine. So this is static, is not changing. These expenses are not changing. See, here we have seen these expenses are changing according to the proportion of the production. Here, even though the proportion of the production is varying, the expenses is not varying, it's fixed. Okay, that is called fixed expenses. Then we will see some important terms associated with the marginal costing. First one is profit volume ratio. Shortly it is called as PV ratio. In the first paragraph, that is in the introduction itself, we have seen that one of the important element of that marginal costing is assessing the profitability of the business. Okay, the profitability of the business operations could be found out by calculating the PV ratio. With the help of this PV ratio, the business can find out the profitability. For this purpose, we have to use a formula. Contribution PV ratio is equal to contribution divided by sales. All these details will be given in the sum. Sales will be given directly, but contribution will not be given directly. We have to find out that. Okay, contribution, how we will find out? Sales will be given. From the sales, we have to subtract variable cost. Variable cost will be given in the sum. Okay, so after subtracting this variable cost from sales, we will be getting contribution. That contribution we have to apply here, and we can find out the PV ratio. Into 100 we have to put, it is missing here, contribution divided by sales into 100, then only we will be getting in percentage. This is the first term associated with marginal costing. And the second one is break even point or break even profit or sales. Okay, it is the point of no profit no loss stage. Okay, in this stage the business is said to be break even when its total sales are equal to its total cost. Expenses அல்லது cost எதுக்கு ஈக்குவலாக இருக்கும்? சேல்ஸுக்கு ஈக்குவலாக இருக்கும். ஓகே, ப்ரொடியூஸ் பண்ணதுக்கப்புறம் ப்ராடக்ட்ஸ் வந்து என்ன பண்ண போகிறதில்ல, ப்ரிசர்வ் பண்ணி வேர் ஹவுஸில் வைக்க போகிறதில்ல. they'll be selling in the market. அப்போது எவ்வளோ எக்ஸ்பென்சஸ் வந்து அதை ப்ரொடியூஸ் பண்ணுறதுக்கு செலவாச்சோ அதே அளவுதான் சேல் பண்ணதுக்கு அப்புறமும் கிடைக்குது அப்படின்னா that stage is called no profit no loss stage. It is otherwise called as break even sales. Okay, for example, ஒரு அந்த எக்ஸாம்பிள் ப்ரீவியஸ் எக்ஸாம்பிள் வில் டேக் 20 chudis மேனுஃபேக்சர் பண்ணுறதுக்கு, ஸ்டிச் பண்ணுறதுக்கு, if that person or the tailor incurs 10,000 rupees, 10,000 rupees வந்து செலவாகுது அப்படின்னா அது சேல் பண்ணும்போதும் 10,000 rupees மட்டும்தான் கிடைக்குது, அடிஷ்னலாக எதுவுமே 1 rupee கூட அதில் ப்ராஃபிட் இல்லை அப்படின்ற சிச்சுவேஷன் இஸ் கால்டு break even point. Okay, with the help of this formula we can find out the break even point. Here two situations there. One is if the values are given in rupees. இப்போ ஃபிக்ஸட் காஸ்ட், வேரியபிள் காஸ்ட், சேல்ஸ் எல்லாமே ருப்பீஸில் கொடுத்துருக்காங்க அப்படின்னா we can apply or we can make use of this formula. Break even point is equal to fixed cost divided by PV ratio. Okay, and the second situation is when the values are given in units, 1.5 to 2.5. Likewise in units, if they are giving, we have to use this formula, fixed cost divided by contribution per unit. When we are calculating, applying these items, we will be getting break even profit or break even sales. Okay, next term is margin of safety. It is a difference between total sales and sales at a break-even point. Okay, total sales means actual sales that will be given in the sum. Break-even sales or break-even point sales means we are preparing in the second step. Important terms we have studied just now. அதில் கிடைக்கக்கூடிய ப்ராஃபிட்டையும் ஆக்சுவல் சேல்ஸ் அல்லது டோட்டல் சேல்ஸையும் கம்பேர் பண்ணும்போது வரக்கூடிய அமௌண்ட். இப்போ ஆக்சுவல் சேல்ஸ் வந்து 10 lakhs இருக்குது, பிரேக் ஈவன் சேல்ஸ் வந்து 8 lakhs இருக்குது அப்படின்னா the 2 lakhs is the margin of safety. Okay, margin of safety means it's the difference between actual sales and break even sales. In the next video we can apply all these terms and find out or calculate the concerned points. Okay, I mean இப்போ PV ratio என்னன்னு பார்த்தோம், break even sales என்னன்னு பார்த்தோம், margin of safety என்னன்னு பார்த்தோம். All these terms we can apply in a sum and we will calculate the matters. Okay, thank you friends.